What if everything you've been told about crypto, the hype, the promises, the get-rich-quick stories, is built on a lie? What if the biggest financial trap of the 21st century is sitting right there on your phone dressed up as an opportunity? Stick around, because in the next 20 minutes, I'm going to show you the brutal, unfiltered truth about crypto. No hype, no bias, just facts, and a few things that might genuinely shock you. Welcome to Money Finance Insights, the channel where we cut through the noise and give you real financial clarity. If you're new here, do yourself a favor right now. Hit that subscribe button and tap the like icon. It helps us keep making content like this, and trust me, you don't want to miss what's coming next. Now, let's talk about crypto. Here's a question that's been dividing dinner tables, Reddit threads, and financial circles for over a decade now. Is crypto actually a scam? Not, is it risky? Not, is it volatile? The real question, is it fundamentally, structurally a scam designed to take your money? And the honest answer, it's complicated. And that complexity is exactly what predators use to take advantage of everyday people like you and me. Let's start at the very beginning. Bitcoin was created in 2009 by a mysterious person, or group of people, known as Satoshi Nakamoto. Nobody knows who this person is. They published a white paper, launched a digital currency, and then basically disappeared. Now, right there, a lot of people stop and say, that sounds sketchy. And look, I get it. But the technology behind Bitcoin, the blockchain, was actually a genuinely revolutionary idea. It was a way to transfer value between two people, anywhere in the world, without a bank in the middle. No fees, no gatekeepers, no government control. That idea was powerful. That idea was real. So no, crypto in its original form was not a scam. It was an experiment, a bold, decentralized, borderless financial experiment. But here's where things went sideways. When people saw Bitcoin go from basically zero to nearly $69,000 per coin in November 2021, something happened. Greed entered the room, and greed in finance is always the opening act for disaster. Suddenly, everyone wanted a piece. Your barber was talking about it. Your uncle was texting you about it at Thanksgiving. People were taking out second mortgages, taking loans, draining retirement accounts, all chasing the dream of becoming the next Bitcoin millionaire. And the market exploded, not just Bitcoin. Thousands of new coins flooded the market. Ethereum, Litecoin, Dogecoin, Shiba Inu, Solana, Cardano, the list goes on and on. At its peak, there were over 20,000 different cryptocurrencies in existence. 20,000 coins. Now stop and think about that for a second. What do the majority of those coins actually do? What problem do they solve? What value do they create? For most of them, honestly, nothing. They were created for one reason and one reason only: to make the people who created them very, very rich. And that right there is where the line between legitimate innovation and outright scam starts to blur. Let's talk about something called a pump and dump scheme. It's been illegal in the stock market for decades, but in crypto, for a long time, it ran completely unchecked. Here's how it works. A small group of people create a new coin. They buy a huge amount of it early, when it's dirt cheap. Then they hype it up on social media. They pay influencers to promote it. They flood YouTube, Twitter, and TikTok with hype. Regular people start buying in. The price skyrockets. And then, at the peak, the founders dump all their coins and walk away with millions. The price crashes to zero. And all those regular people, they lose everything. This happened over and over again during the 2020 and 2021 bull run. And it wasn't subtle. There are documented cases of celebrities promoting coins they were secretly paid to promote without disclosing it. The SEC has gone after multiple people for exactly this. Kim Kardashian paid a $126 million settlement in 2022 for promoting a crypto token called Ethereum Max without disclosing she was paid to do it. Floyd Mayweather and DJ Khaled both faced legal trouble for similar promotion activities. These are not small things. These are real people losing real money. And it doesn't stop with celebrities. Entire projects were built as what the industry calls rug pulls. The developers build enough buzz to attract investor money. They pull the liquidity, meaning they drain the funds backing the coin and disappear overnight. In 2021 alone, rug pull scams cost investors over $2.8 billion. That's not a typo. $2.8 billion stolen in a single year through deliberate fraud. One of the most famous examples is the Squid Game token. If you remember, in late 2021, the Netflix show Squid Game became a global phenomenon. Within days, someone launched a crypto token called Squid, riding the hype. The price shot up over 75,000% in a matter of days. People were going insane over it. And then, poof, the developers vanished. The coin went to almost zero within minutes. Investors lost millions. And the creators were never caught. That's not crypto being risky. That's crypto being used as a vehicle for theft. Now here's where I want to be really fair with you, because Money Finance Insights is not here to tell you what to think. We're here to give you the full picture. Because here's the other side of the story. Not everyone who invested in crypto lost money. Some people made life-changing gains. Early Bitcoin holders who bought in under $1,000 and held through to 2021 became millionaires. Ethereum investors who understood the technology early were rewarded generously. Some DeFi projects, decentralized finance applications, have genuinely disrupted traditional banking in ways that benefit people in underbanked regions of the world. In countries where inflation is destroying savings, places like Venezuela, Argentina, and Nigeria, Bitcoin has actually served as a real store of value, a way to protect money from a collapsing currency. So here's the brutal truth. Crypto is not a scam, but the crypto industry is absolutely filled with scams. And the difference between those two statements is everything. The technology itself, blockchain, is real and legitimate. It has use cases that go far beyond digital currency. Supply chain management, healthcare records, voting systems, smart contracts. Blockchain has genuine applications that major corporations are investing billions of dollars into right now. Companies like JP Morgan, BlackRock, and Visa are not pumping money into blockchain technology because they think it's a joke. They're doing it because they see the future. But the individual coins, especially the thousands of tiny altcoins created every single day, that's where the danger lives. Because most of them are not technology plays, they are speculation plays. And speculation is just a polished word for gambling. Let me walk you through something that will help put this in perspective. Imagine you're at a casino. The house always has an edge. Most people walk out with less than they walked in. A few people win big. And everyone who wins big is visible. They're loud, they're excited, they post about it. But you don't hear from the people who lost their rent money. You don't hear the quiet stories. That's called survivorship bias. And it is one of the most dangerous psychological traps in investing, and in crypto especially. When you see someone on YouTube talking about turning $500 into $50,000 with some obscure coin, you're seeing the one person out of 1,000 who got lucky. You're not seeing the 999 people who lost their $500. That's not an investment strategy. That's a lottery ticket. Now let's talk about something really important. The regulatory situation around crypto in the United States right now is genuinely interesting. For years, the SEC and federal regulators took a pretty hands-off approach. That started changing dramatically around 2022. The collapse of FTX, one of the largest crypto exchanges in the world, was a watershed moment. FTX was founded by Sam Bankman-Fried. He was young, charismatic, appeared on magazine covers, testified before Congress, and was considered one of the most trustworthy names in crypto. He was worth an estimated $26 billion at his peak. And then in November 2022, FTX collapsed practically overnight. Billions of dollars in customer funds were missing. People who had their savings on the platform couldn't withdraw a single dollar. Investigations revealed that customer funds had allegedly been used to fund other ventures and risky bets. Sam Bankman-Fried was arrested. In November 2023, he was found guilty on all 7 counts of fraud and conspiracy. He was sentenced to 25 years in prison, 25 years, for what started as a crypto exchange. That event shook the entire industry. It proved something that skeptics had been saying for years, that without proper regulation, crypto was the Wild West. And in the Wild West, the people with the fastest guns usually win, and ordinary folks get robbed. But here's something fascinating. Even after FTX collapsed, even after the 2022 bear market wiped out over $2 trillion in crypto market cap, even after all the scams and rug pulls and bankruptcies, crypto came back. Bitcoin hit a new all-time high of over $100,000 per coin in late 2024. Institutional money poured back in. Spot Bitcoin ETFs, exchange-traded funds that allow regular investors to get crypto exposure through their regular brokerage accounts, were approved by the SEC in January 2024. That was a massive moment. It brought Bitcoin into the mainstream financial system in a way that had never happened before. So what does that tell us? It tells us that even after everything, even after all the fraud, all the manipulation, all the heartbreak, there is something at the core of crypto that the market believes has value. Whether you agree with that or not, you can't ignore it. The data is the data. Now let me give you the practical breakdown you actually came here for. How do you know if a specific crypto project is legitimate or a scam? Because here's the reality. In 2025, with regulation improving and institutional adoption growing, there are legitimate crypto assets worth understanding. And there are still thousands of garbage coins designed purely to separate you from your money. Here are the red flags you must know. If a project promises you guaranteed returns, run. Nothing in investing is guaranteed. If a project has an anonymous development team with no verifiable identity, be extremely cautious. Satoshi's anonymity worked in 2009. In 2025, a faceless team launching a new coin is a massive warning sign. If you're being pressured to invest quickly because of a limited window, that's a manipulation tactic called manufactured urgency. It's the same thing shady salespeople use. If the project's white paper, that's the technical document explaining what the coin does, is vague, full of buzzwords, and doesn't explain a clear use case, walk away. And if you're finding out about a coin through a random DM on Instagram or a text message from an unknown number, that is almost certainly a scam, no exceptions. On the flip side, here are signs of a more legitimate project. A clear and transparent development team with verifiable backgrounds. A real working product or use case, not just a promise of one. An audited smart contract, meaning an independent firm has reviewed the code for vulnerabilities. Strong organic community support, not just paid hype. And a genuine utility beyond the price will go up. Legitimate projects are solving actual problems. They're not just selling you a dream. Here's something I want you to sit with for a moment. The people who get hurt most by crypto scams are not wealthy investors. They're working class people who saw crypto as a chance to finally get ahead. A young couple who invested their savings, a single parent who dreamed of financial freedom, a college student who thought they found a shortcut. These are real people. And the financial trauma from losing money you couldn't afford to lose is not a small thing. It can take years to recover, financially and emotionally. That's why financial literacy isn't just a nice to have. It's a form of protection. And that's exactly why Money Finance Insights exists. Not to hype you up, not to sell you something, but to arm you with the knowledge to make smart, informed decisions on your own. So where does crypto stand today? Right now in 2025, the landscape looks very different than it did in 2021. Regulation has increased significantly. The SEC has taken action against major players. Exchanges are being required to register and comply with anti-money laundering rules. Several countries have created comprehensive crypto regulatory frameworks. Institutional adoption is at an all-time high. BlackRock, the largest asset manager in the world, manages a Bitcoin ETF. Fidelity offers crypto investment options. Even traditional banks are starting to offer custody services for digital assets. None of that means crypto is safe or risk-free. It absolutely is not. Crypto remains one of the most volatile asset classes in the world. A coin can drop 80% in a matter of weeks. It's happened before and it will happen again. But it does mean that the foundational technology is being taken seriously by very serious people, and that matters. Here's my honest take. And I want to be very clear, this is not financial advice. Nobody should put money they can't afford to lose into crypto, period. Not Bitcoin, not Ethereum, nothing. The never invest more than you can afford to lose rule exists for a reason. And in crypto, that rule is more important than anywhere else. But for someone who understands the risks, who has done their research, who treats crypto as a small, speculative portion of a diversified portfolio, it doesn't have to be a financial death sentence. Some people use a simple rule. No more than 5% of your total investment portfolio in crypto. That way, if it goes to zero, which it could, your financial life isn't destroyed. If it moons, you still benefit. But here's what I want you to take away more than anything else. The scammiest thing about crypto isn't any specific coin. It's the culture around it. The culture that says you have to get in now or be left behind forever. The culture that shames people for being cautious. The culture that celebrates reckless risk-taking and mocks people who ask questions. That culture is dangerous. And it's deliberately manufactured to override your better judgment. Your skepticism is not weakness. Your caution is not ignorance. Your need to understand something before you put money into it is not a character flaw. It is wisdom. And in the financial world, real wisdom will protect you far better than any hot tip ever will. Let me bring this home with a real story. In 2021, a man named Gerald Cotton was believed to have died unexpectedly, taking the password to roughly $250 million in customer funds with him. This was the Quadriga CX case. Customers were left locked out of their own money. Some lost life savings. Some never recovered financially. The case still has unresolved mysteries today. That story is a perfect metaphor for everything dangerous about unregulated crypto. The concentration of control, the lack of transparency, the fragility when things go wrong. But on the flip side, there are people today living comfortably who had the foresight and the guts to buy Bitcoin early and hold it through the crashes. People who believed in the technology and were rewarded for their conviction. Both of those stories are true, and both of them deserve to be told. The truth is never simple, and anyone who tells you crypto is 100% a scam or 100% the future of finance is selling you something. Reality lives in the middle, and navigating the middle requires knowledge, discipline, and a deep respect for your own financial well-being. Now, before I wrap up, I want to ask you something directly. Have you ever lost money in crypto? Or do you know someone who has? Or maybe you've made money. and you want to share how you did it, drop it in the comments right now, seriously. Tell your story, because when we share our real experiences, the wins and the losses, we protect each other. Your comment could be the thing that saves someone else from making a huge mistake. And if this video gave you value, if it opened your eyes to something you didn't fully understand before, please share it. Send it to a friend. Post it. Because financial education is one of the most generous things you can give someone, hit that share button and pay it forward. And here's the final thought I want to leave you with. We live in a world full of noise, full of promises and pitches and people who want your money more than they want your success. Navigating that world is harder than ever, but you don't have to do it alone. That's what this community is for. That's what Money Finance Insights is built on. Not hype, not shortcuts. Just honest, clear, real financial education for people who want to build something that actually lasts. Crypto isn't going away. The question is whether you're going to approach it with your eyes open or let someone else do your thinking for you. You already made the right choice today just by watching this far. That tells me something about you. It tells me you care. And people who care, people who stay curious, stay humble, and stay informed, those are the people who build real financial security over time. Thank you for spending this time with Money Finance Insights. We'll see you in the next one.